fund crowdsourcing, we're focusing particularly on crowdfunding today, okay? Because there is 4 different types of crowdfunding. The mic is on, I don't know how to switch it off, but it's fine. Okay, so crowdfunding, I'm going to go through the 4 different types today, the advantages and the disadvantages. So in terms of the material, in terms of what I'm actually giving you today, very, very basic stuff, and it should give you an understanding of the 4 different types, okay? So with the rest of the ones that we've done so far, the 4 in particular, and then there's the table with a few extra ones, it is literally just those. There's nothing that comes underneath them, okay? But whereas with crowdfunding, there are a few kind of different types. So if you are choosing or trying to choose crowdfunding as your essay question, yeah, for your business case study, you might want to know the different types, so it's easy for you to explain and actually figure out what's going on. Okay, so today's lecture, we're going to discuss crowdfunding, the different types of crowdfunding, the advantages and the disadvantages for each type. So like I said, in terms of what I'm giving you, it's very, very basic stuff, and I'll just make sure at the end that everyone has a basic understanding of each of the 4 types. Just quickly as well, for your assignment, if anybody remembers any part of the question for crowdsourcing, it says choose one type of crowdsourcing. What we've done is we've changed it to 1 or more, because as we've been kind of researching, and especially this week's seminar, we find that actually most businesses don't just do 1 type of crowdsourcing, okay? Unless it's crowdfunding, it tends to be 1 type of crowdfunding, but if it's anything else, it tends to be 1 or more. So that's why we've changed the wording to 1 or more. So if you do 1, absolutely fine, no problems at all. But if you find that actually your company does 2 or 3, you can talk about all of them and not have any kind of consequences, if that makes sense. So it just gives you the option to talk about 1 or more than 1. Everybody clear with that? Yeah? Fab. So if you do see the assignment brief, just the wording changed a little bit, all it's done is give you the option to talk about more than 1 if needed. Okay? Right, so crowdfunding, it can be divided into 4 primary categories. So these are the 4. We have donation-based crowdfunding. This is probably the one that you're all most familiar with. We've got reward-based crowdfunding, debt-based crowdfunding, and equity crowdfunding. Okay? So when it comes to these 4, we're going to go through the meanings, the advantages, and the disadvantages. So here, if you did want to use any of these definitions, then you can. So we're going to go through each one. Donation-based is basically money is used to support a charitable project or sponsor an individual. So when it comes to donation-based, it's usually for charities, it's usually for not-for-profits, social causes, all that kind of stuff. And usually to sponsor an individual, depending on what it is that they want to do. So I'm pretty sure most of you have heard of certain individuals, friends, family members, that basically say, oh, I'm going to climb the Yorkshire 3 Peaks for charity, or I'm going to shave my head for charity, or whatever it is. They tend to use donation-based crowdfunding to help them raise finances for whatever cause it is that they need. Okay, so we've got rewards-based crowdfunding. Investors receive some kind of reward in return for the investment. The reward may be tangible or intangible. Okay, it could also be financial or non-financial. So when we had a look at the Threadless YouTube video a few weeks ago, 2 weeks ago in your first lecture for crowdsourcing, their rewards were both tangible and intangible, financial and non-financial, okay? So tangible, for those of you who don't know, is literally anything that you can hold, touch, physically have, and then intangible is going to be stuff that you benefit from, but you can't actually feel it. So usually, we're going to go through the examples of that later, so I'll go into that in a bit more detail. So that's donation and that's rewards. Then we have debt-based. This is more traditional. This is more what we're used to in terms of raising finances for businesses, okay? So investors receive interest in return to the funding provided by them. So naturally, you have an investor who's going to give you some finances, but what they get in return, finance. Another form of finance is in terms of debt, and that's based on interest, okay? As I mentioned, I'm just skimming through this part now, and then I'm going to go through each one in detail after. So as debt-based is more what we're familiar with, equity-based is also what we're more familiar with. So this is investors receive equity in the firm in return to the investment provided by them. So we have people investing, and what they're getting in return is part of the business, a percentage of the business. Okay? So that's the 4 types. So as we go through, I'll kind of talk about the main points for each one. I give you pretty much a few examples and just where they relate to the most. Okay? So donation-based crowdfunding is an online platform that allows individuals to make small to large number of financial contributions. So the main thing with this one, well, all crowdfunding to be honest, and mostly all crowdsourcing, is that it's all online. So just really be mindful of that. It's all online. So when you're questioning whether a business is doing a form of crowdsourcing, what you will find is that if it's not online, is it crowdsourcing? You need to ask yourself that. Somebody gave me an example of Dragon's Den. I'm using them for crowdfunding. You have to think about that. Okay? Right, so this type of crowdfunding is ideal for not-for-profit or social causes. As we mentioned, it's more charity-based. So, for example, natural disaster relief. So if we look at the earthquakes that have just happened in Turkey and Syria, a lot of people have set up GoFundMe campaigns to raise those finances to go directly to those charities. We've got social justice campaigns, helping local families or people in need. So again, the scale of how much you want to raise is up to the individual. I don't think there's a limit. If you need to raise 10,000, you can raise 10,000. If you raise 100, you can raise 100. Okay. So examples for popular crowdfunding platforms are GoFundMe. Everyone heard of that? Yeah, pretty sure most people have. It's becoming very, very popular. And CrowdRise. So they're 2 main things. So with donation-based crowdfunding, it's the only one. Oh, actually, I'll go through that next. 1 second. Okay, so now we're going to go through the advantages and disadvantages. So before we move on to that, does anyone have any questions on this? Is it pretty clear? What really does help is the name of each one. It literally tells you exactly what it is in the name of it, okay? So the advantages is that it's generally low risk. Crowdfunding itself, no matter which type it is, tends to be generally low risk because you literally are just putting up what it is that you're trying to raise money for, and people donate or give money. So it really is not a lot to lose. Nothing is expected in return, so no rewards, financial or non-financial. So donation-based crowdfunding is actually the only one where the person providing finances doesn't get anything in return. Okay, so that's the main key difference between this one and all the rest. Okay. So just bear that in mind. No equity of the business has to be given up. You remain in control. So naturally, if you're not giving anything up, you don't have to worry about your business in terms of decision making or anything having to be given up in terms of equity. Okay. So really, really simple, basic advantages and disadvantages that I'm giving you, and the rest is for you to kind of find out. The rest is for you to research and apply to whatever business case study it is that you're doing. The disadvantages, you are held to a higher standard to use the money appropriately. So naturally, if you're a charity, if you're a social cause or whatever it is, the way you use your money needs to be absolutely transparent. Okay, if people are giving you money from their goodwill and for their own kind of conscience, you need to be using that money very ethically. Okay, and obviously, if you don't do that, any misuse of funds can damage the business reputation or credibility, and that's the last thing you want as a charity, to be in the limelight for using those funds unethically. Okay, there's a lot of trust put in this platform, and obviously you, as the person who's trying to raise the finances, are responsible for using them ethically. Okay. So basic advantages and disadvantages. The main thing, so if you are trying to use a company that has used donation-based crowdfunding, the main thing that you want to be able to do, the question doesn't really, the essay question doesn't really say advantages and disadvantages. Naturally, yes, you might talk about them. The actual question focuses on successes and failures, okay? Naturally, some advantages are going to link to the successes of the campaign, and naturally, some disadvantages are going to link to any potential failures as well. So it's your job to be able to distinguish the two and kind of link them should they need to be linked, okay? So that's donation-based. Any questions on this? No? It is fairly straightforward, so we should be all right. Okay, rewards-based crowdfunding. The reward-based crowdfunding is when people offer a specific amount of money to the business with the expectation of receiving a reward. Okay? So as we were mentioned already, this can be tangible or intangible. This can be financial or non-financial. Okay? So usually with a business, say for example, for those of you who know, my water bottle is always my example for any kind of curse that I do. So this is my business. I'm starting up a water bottle business. Okay? I am trying to raise funds, and I want to decide that anybody who donates, I'm going to give them a reward. The reward is going to be the product. I want to get my product out there to as many people as possible. So anybody who donates, I am going to give them a prototype or a bottle. Okay? So with that, this is a tangible, non-financial reward. Okay? So the reward can be actually receiving the product or service from the business. So example, the water bottle. It can also be rewards in other terms like discounts or being a member, being part of a loyalty scheme, a VIP scheme, being, privy to certain exclusive deals, whatever it may be. That is totally up to the business. The business gets to decide the type of rewards that they want to give. Okay, no matter how small or big, and again, if they want to make it money based or not. Okay, so crowdfunding platforms such as Kickstarter are used for reward-based fund collections. Has anyone heard of Kickstarter? I think it's becoming more popular as well. I think most people are doing it. So that's basically rewards-based. So in this one, now we're moving, so donation-based was the only one where you don't get anything in return. Now we're moving towards the ones where you actually do get something in return. Okay? So now we're going to move on to the advantages and the disadvantages. So no equity of the business has to be given up. You remain in control. Really simple again, same as the first one. You're not really giving any part of your business up, so therefore you don't have to deal with that. This is interesting. So valuable insight can be gained the funding campaign beforehand to see if there's even demand for the product or service, depending on the rewards being chosen. So naturally, with crowdfunding, what you find is that they tend to be businesses that are new. They tend to be startups, they tend to be very small businesses, potentially medium as well. But they basically are going towards a non-traditional route of raising finances, therefore they go crowdfunding. And they tend to be businesses that haven't been set up yet or are in the process of becoming set up and launching. So with that, it's really helpful in this case to actually identify if there's even a demand for the product or service. Okay? Usually, if you are giving up your money, your own finances to help a business launch, you tend to have some sort of connection with that business. It's not really going to be something that you absolutely dislike or despise. It tends to be actually you have an interest or a passion, or you really like that product or service or something like that. Okay? So for those people who are then going to invest in my water bottle business, they're going to have to like water bottles. They're going to have to use them. Yeah? I mean, you might get the odd one or two people that just say, I'm just going to invest in anything, I really don't care. Fine. But generally, if you are parting with your own hard-earned money, it tends to be something that you actually want. So with that, you can kind of gauge if there's even demand for it. So if the reward you're giving is the actual product, and you find that actually so many people are donating because they really enjoy getting the product for free, you might be able to say, okay, hang on a minute, we've got some potential here. We can definitely, start off the business high. We've got demand. We can get an idea of the kind of trajectory that we're going along. Okay, so that's another advantage. Disadvantages: there's no guarantee that the business will be successful even after the funds have been raised. So this is with all of them, to be fair. This is not just with specifically to rewards-based crowdfunding, because obviously with donation-based, you might be able to, maybe less with donation-based, because usually when you reach your target, you can use those funds to do whatever good you need to do. But with the rest of them, say you need £50,000 to start your business. Once you've achieved that 50,000, you might even go a little bit over. It doesn't necessarily mean your business can be successful. Yeah, you've got the funds, but obviously there's a whole host of other things that affect it. You guys all know about internal and external factors that can affect a business. So it doesn't just mean that, once I've got the capital, that's it, job done, business successful, business running. Okay? And also there may be increased cost due to shipping or types of rewards. So most businesses, that, like I said, it's down to them what they choose their rewards to be, no matter how small or no matter how big. But what most businesses will probably sometimes do is have an idea, all well-intentioned, but not realize the amount of work that goes into it. So if every single customer gets a free water bottle, what is the limit? Is it national? Is it, where's the geographical limit? Is it worldwide? Naturally with that, if it's shipped, that's going to incur more costs. If you realize, actually, this is way too costly, I didn't expect this, and you can't fulfill that, that's going to obviously affect your reputation negatively, and give you, like mistrust within you and your potential customers, or even in this case, your investors. So they have to be mindful of the rewards and how they're doing it. A way around it would probably be like, okay, when you come in store or whatever, you get a free water bottle. Just show the fact that you've done something, or that you've invested some money, and then in this email, present the email, and then you get a free water bottle, whatever it may be. But that's different ways in which they can curb those costs. But if they don't think about it, if they don't do it correctly, that may increase it. Okay? So that's reward-based. Any questions on this? No? Okay. Fine. Right, so debt-based crowdfunding. This is like borrowing a loan. So now we're moving into the more traditional ones, the ones that we're more familiar with. The lenders expect interest in exchange for their finances. Okay? So different to bank loans, where companies typically borrow a lump sum, debt crowdfunding allows the business to take several small loans from different people. So generally speaking, when we're starting up a business, we tend to go to a bank. It tends to be our own bank, or the ones that are doing the best interest rates. We go to them and we get a whole lump sum from one person. Yeah, that's the traditional way that we do things. We pay them whatever fixed interest rate there is, and we pay it back over time. That's how it's done. Now, what's becoming increasingly popular is spreading that. So instead of going to one person or one entity that's going to provide us with the whole finances, we break it down and we take smaller loans, and we still achieve the same financial goal that we need to, but it's just from multiple people, multiple donors. Okay. And Zopa is an example of debt-based platform. So with this, the several smaller loans, there's advantages of that and there's disadvantages of that. So some people might think, oh, brilliant, yeah, I don't have to just pay the bank back, I can pay loads of people back at certain given time. But equally, there's disadvantages to that too. So the interest rate, again, I think that's set on, I'm not too sure because obviously I haven't set my own debt-based crowdfunding campaign, but I think the interest rate would obviously be in line with whatever the current interest rate is for banks and stuff, or maybe a little bit cheaper. It would just depend. Okay, so the advantages and disadvantages. Advantages is you avoid rejection from banks. Okay, so naturally when you go to take out a loan, what do? A credit check, credit history. And you have to, have those certain hoops that you've got to go through to be able to get that money, and especially because it tends to be a larger sum of money. So in this case, you don't have to do that. So if you've got a dodgy credit history, you've got some bank loans and some credit card debt, you won't actually be affected by that. And you spread the risk by taking smaller funds from multiple investors. So smaller funds, easily more manageable, yeah, compared to one big lump sum. Multiple investors is where it gets a bit tricky. So when you think about, so now we're going to move on to the disadvantages. It kind of links in really well here. When you think about the bank, it doesn't really have a personality. It's the bank. You don't really see it and think, oh, if you don't pay the money back, you're not going to feel so bad. Like, oh, the bank's not going to have the money it needs to feed its children, or buy their wife their anniversary gift, or whatever it is. It's a bank. Yeah, it just gets money from other people. There's no emotional connection with it. Whereas when you're actually borrowing funds from individual people, and then more than one person, the pressure to pay them back is going to be there, right? Because there's a face, there's people, there's a name. Then you have the pressure of paying them all back. But hopefully the smaller lumps just makes it easier. So you can see that as an advantage and a disadvantage. Obviously that would increase stress and pressure to pay them back, because if you know that it's going to affect their life or affect them, it may. Some people don't care, naturally, and some people will. Okay, so it depends on you, the type of business owner you are, and that kind of stuff. So now that is debt-based crowdfunding. Any questions on this? No? Okay, fab. So we're moving pretty quick. So as I mentioned, donation-based is something that can be when you're starting up a charity, but it can also run alongside while you're running. So it's not limited to just only when you're starting up, okay? Rewards-based and debt-based is usually just for startups or very, very new, not established kind of businesses who still need that injection of finance to help them grow and stabilize and build a foundation for their business, okay? Now the difference between equity-based and the rest of them is this is the only one that has to be done or set up once the business has already been taken off, once the business has already been established and been running for a little while. Why? Because it involves giving a percentage of ownership. So for those of you who don't know what equity is, you kind of should, but if you don't, basic business terms, equity is is ownership of something. Yeah, part ownership, a percentage, a piece in the company. And as I mentioned, it's only possible once the business is taken off. Why? Really, really basic. If your business is not running, is not successful, how can you give somebody a percentage of something that's not successful or not doing anything? Yeah? You have to, so think about it in this way. The people who are donating or offering finances, they're going to get something in return, right? In this case, it's a percentage of the business. So what's the first thing? So think about it right now. You guys are all investors. You're going to invest in someone's company for a percentage of it. What's the first thing you're going to ask when you're investing? Well, what should be the first thing? Yeah.
How much that company's worth?
Yeah, how much your company's worth, how much money are you making? Are you making a profit? Are you successful? Basic stuff, right? Because you want to know when you're going to get your money back. Anything else that you would ask? I kind of just told you.
All the finances, like, related to.
Yeah, so with that, you'll be able to identify when you're going to get your money back, your initial investment, when you're going to start making a profit, right? So naturally, to have that information or to have those answers for those investors, you're going to need at least a year's worth of profit and loss statement, balance sheet, all that kind of stuff to be able to provide that information to them. So this is why this is the only one that really need to be established, and it's not really for startups. It could be, but it's better once a business is taken off. So it's very similar to angel investors, and again, it's all done on an online platform. So angel investors, this is where it's different. So the main thing you have to remember, so I also mentioned Dragon's Den. Angel investors, that's their job. Their job is to invest, that's what they do. That's the whole purpose of why they exist, okay? The difference now between that and crowdfunding, any type of crowdfunding, is literally in the name. We go to the crowd. When the crowd is no longer the general crowd and they're specific, it's no longer crowdfunding, okay? There's certain things that are a little bit blurry in terms of people crowdfunding from banks and stuff like that, and it does get a little bit tricky. But if you're just doing the basic stuff, it should be very clear that crowdfunding is from the general crowd. Okay, so try to keep it simple. Try not to confuse yourself. I just used what you have. Okay, it involves collecting smaller sums of money from a larger number of private investors. So again, very similar to all of that. What you're doing is instead of getting that one big lump sum from that one individual, one bank, one entity, you are breaking up, spreading the risk by getting smaller, more manageable chunks of finances from different individuals. Okay? Seedrs and Crowdcube are some of the main equity crowdfunding platforms in the UK. So the reason I've given you at the end all the different examples of them is because if you choose a business, naturally I would say about 85% of you are going to choose your mainstream, multinational, large companies. Your McDonald's, your Starbucks, your IKEA, all that kind of stuff, because it's easy to find. If you're doing crowdfunding, what you will find is that most businesses tend to be very small, that you don't really know or you haven't really heard of, because they're startups and they need that funding, okay? So this is an interesting question now. So why would you not get your large companies like Starbucks, IKEA, blah, 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 crowdfunding? Do they crowdfund, for example? Do you think? Probably not, right?
I guess crowdfunding didn't really exist when the companies.
Oh, crowdfunding has been happening for a long time, but crowdsourcing in general has been happening for a long time, but it's only just been given a name, I say just, but in 2006. But yeah, good try.
They've probably already got the finance, so they don't need to.
Exactly, they're already established, right? They're already running, they're already generating revenue and sales and profit. So if they needed funding, what would they just do? If they decide, oh, I want to open another store in another country, what are they going to do?
They just use their own.
Yeah, they'll just reinvest their profits, right? Retain profits. Or if they weren't making that much money and actually realize they need a loan or something, they just go to a bank. It's going to be so easy for them to borrow money from a bank. They're not going to have any problems. It's just like, oh, boom, Starbucks, yeah, of course, take my money, no problem, you know? So therefore, they don't need to benefit from this. They have the track record and they already have their own, they're really established. It would be funny though, right? If you go into a Starbucks and you randomly see a crowdfunding campaign, and you know, there's like, oh, give us your money so we can open a new store or whatever it is. There's kind of a blurred line because it can be seen as unethical, especially with the larger companies. For some reason, we're more trusting and we're more ready to give smaller businesses that haven't started out, but we probably wouldn't give our own finances or, you know, donate to big, large companies like that, because there is a line of where it becomes a little bit unethical because they have the foundations to raise their own finances. Okay, so yeah, the reason I've given you those examples at the bottom is that when you are researching and you are looking, you can find actual examples of businesses. So if you want it to be a little bit different, because naturally I'm gonna be marking like 260 of your papers, and I'm gonna see Starbucks, IKEA, McDonald's. So if you want to do something different and, you know, surprise me and give me a company you've not heard of and do your research on it, this is exactly where you can go. You can see live businesses that are actually funding right now and in the midst of being set up. Okay. Naturally, though, you will have less information available, but you can also see failed campaigns. So when you're talking about successes and failures, that kind of stuff, you can have a look. And obviously, when you have your business case study and your business example, you usually want to talk about one throughout, but does that mean you're limited to just the one? No. If you're talking about if you're trying to make a point that's on the contrary of what you're saying or something that agrees with what you're saying, you can pull in other examples. As long as it's very apparent which your actual business case study is, there's nothing stopping you from bringing other businesses as an example to help back up your point. Does that make sense? Yeah? Okay, fine. So now the advantages and disadvantages. It can help generate large amounts of income for the business. So with equity-based crowdfunding, this is probably the one that you're going to get the most finances from. So donation-based, you're not getting anything. The person who's donating doesn't get anything. So naturally, the bit that you're donating tends to be low. The amount that you're actually contributing will tend to be lower. Yeah, if you're not getting anything in return, you're probably just £5, £10, £20, whatever, depending on your means. Rewards-based, depending on what the reward is, you tend to kind of match that. So as I mentioned with my water bottle, I'm not going to go ahead and invest hundreds of thousands into something when I'm only going to get a water bottle, right? So that tends to be a little bit lower. Debt-based and equity-based tends to raise higher or larger amounts of finances because there's more to gain as an individual. So if you're parting with your money and you get the interest paid back, lovely, you're getting extra finances. The more you obviously invest, the more you get back, right? Equity-based, the more you invest, the larger percentage you get of the business. So there's more at stake for you, there's more potential earnings for you as well. So therefore you can potentially raise more, okay? So with crowdfunding platforms, it helps entrepreneurs deal with several investors as a single investor, thus saving entrepreneurs the trouble of dealing with suggestions provided by multiple investors at the same time. So as we mentioned, with normal ways of funding, it's one bank. They don't really care what you're doing with the business, they don't really care about decisions and all that kind of stuff. The minute you start giving up percentages of your business is when people start having to say, people feel entitled, and people want to get involved. Okay. The disadvantage is that you have to give up some of your business. Again, I think it's down to the business, how much they want to give up, how much percentage they're willing to part with. But it could have impacts on the decision-making process in the future, especially if you have more than one person or people having large percentages of it, they tend to feel more entitled and more opinionated. Does anyone know what the percentage is to take control of a business? 51%. So for those of you who didn't know, now you know, okay? 51% is the majority share, and they then take ownership of the business. Okay? Right, fab, so that's now equity-based. So as I mentioned, this one is probably the most different to all of them. You have to be already set up. You have to, you can raise more finances because there's more to get in return. Okay? So that's the 4. Any questions on any of the 4 at all? Is it very relatively clear? Yeah? Fab. All right, to summarize then. So crowdfunding itself has many different advantages and disadvantages. What I've done is I've only given you the very basic, the very minimum advantages and disadvantages, just to help you get an understanding of what they are. Once you research, once you look, once you have a look at your company, naturally some companies will have done interviews, will have written articles, and have some kind of, what's the word? Feedback based on what it is, and maybe you can find out some from there. It's become increasingly popular and widely used for raising finances. So before it wasn't the traditional way, but now more and more businesses that are starting up are using this. So if you could find some statistics on this, that would be really good in helping you understand and write your essay. And one good thing about crowdfunding, there's no really limitations in where it can be applied. So you can use it for any industry. It's not just the engineering industry or the software industry or the healthcare industry. Any industry that you want to set up, you can raise finances from crowdfunding. Sectors or causes, again, so whether it's a charity, there's no limit on what kind of charity it is that you use it for. Okay? So as I mentioned then, the assignment is 1 or more. If you are doing crowdfunding, if you are choosing a business that's done crowdfunding, you need to make it very clear which type of crowdfunding it is. If you are just generically saying, oh, this business crowdfunded, without actually specifically mentioning, it shows a lack of understanding because they're all very, very different. Okay? Right, and that is pretty much it for the class. Before we all leave, I want to just check that you remember what they all were. So, I want different people to tell me the names of them and what they are. So we've got 4 different types of crowdfunding, 4 different explanations. So once I have them all from the class, go. So does anyone want to give me one? Yep.
Rewards-based crowdfunding would be you giving money towards a business and then getting something intangible.
Yeah. Fab. So that's reward-based out. Well done. Thank you. Anyone else? Don't be shy, guys. It's a very small lecture, so. Yeah.
Donation-based.
Donation-based?
Making a donation but not expecting.
And minimum return. Perfect. So just literally giving for the goodness of your heart. Okay, good. 2 more. If you want to get out, you can just answer. Somebody different? Yeah.
Debt-based.
Debt-based, yeah.
Taking out smaller loans from. Yeah, I just think it's what it is.
Yeah, so smaller loans from multiple investors. What do they get in return? Anyone want to help that? Yeah, perfect. Well done. And the last one, which is literally the last one that we did. Yeah. Perfect. Given a percentage of the business for some finances. But okay, well done. We are done. Thank you very much.